You want it? We have it. The hottest mortgage and real estate strategy broadcast in the nation. A Smarter Way Home with your host, Danielle Boote and Victor Bals. 50 years combined experience, ranked in the top 1% in the nation for home loan originations 2020. Promise to expand your knowledge, utilizing creative mortgage financing and home buying strategies. Build a bridge for a better quality of life. Get your brain cells firing for a smarter way home. And good afternoon, all our listeners. This is A Smarter Way Home. I am your host, Victor Bals. Today's topic, as we talk about home buying or modern mortgage solutions and home buying strategies for real estate professionals and consumers alike, we want to talk about a big topic out there in America, and that is student loan debt. Seems to be epidemic right now. Anyway, right now in America, there is about $1.6 trillion in student loan debt. We're going to talk about that today. And I want to welcome my co-host, the extraordinary loan officer, Mrs. Danielle Boote. How are we this morning?
I am doing fabulous. How are you?
Good.
You said it was afternoon. So are we going to be afternoon or morning today?
It's going to be like a brunch.
Okay. This is a brunch show.
This is a brunch show. So let's talk about it. You just brought up a topic. We were talking about student loans here, and you brought up a point that we got to make across to our listeners that we are also parents. What are you talking about there?
Yeah, so I think it's an important, not only is this a really hot topic and definitely impacts mortgage lending, but it impacts our nation. And, you know, the conversation that you and I had the other day was, hey, in addition to being mortgage professionals, we're also parents. I have two daughters that have already graduated college. I have two children that are in college actively full-time at this point in time. And I also graduated with my bachelor's degree a little bit later in life and graduated about 10 years ago. So not only did I navigate, you know, my career and my finishing college as an adult, but I had to figure that out. So frankly, my experience as a working adult going back to school, trying to afford college with 4 kids and, you know, being employed, self-employed, all that good stuff. You know, I've also gotten my kids through school. So I think I've learned an awful lot in the last 10 to 15 years about this.
Did you
topic.
utilize any student loans for any of that situation
Yes.
along with you or your kids?
Yes, I took out student loans as well as my 2 older adults. Okay. We're still navigating it with the younger 2 and have chosen some different routes to get the younger 2 through school.
Okay, so back in 2020 or when the pandemic hit, the Trump administration kind of said, okay, everybody can go into forbearance on your mortgages, on your rent, and also student loans. They just put a stop payment on everything.
Correct.
And it wouldn't affect your credit. Kind of give our listeners an overview of what had happened and where you see it going and some of the hot points that we're going to talk about here today.
Well, the CARES Act was passed in April of 2020 that allowed consumers to pause payments and interest on their student loans. What the government did, and most student loans are backed by the U.S. Department of Education. I believe 92% of student loans in this country are government-backed loans.
That is correct, and also the other 8% is by private institutions or banks.
Right. So what we're talking about here are the government-backed loans, not necessarily the private loans. The government-backed loans immediately paused everybody's interest rate to 0%, and they put all student loans in forbearance, meaning they had no minimum payments due. Now, you could choose to continue to make a payment, but everybody got this 0% interest for the last, basically 18 months right now.
Okay, so how does that affect credit? How does the reporting go to credit?
Well, what we see on the credit report is that the loan is in forbearance, and we will see no minimum payment due on the credit report.
Okay. So let's talk about these. So the student loans are in deferment, I guess, or in
forbearance. Yeah,
forbearance.
There is such thing as deferment with student loans, but that is not the COVID CARES Act forbearance
And
plan.
there's a big difference between forbearance and default. Let's just kind of lay that groundwork, because people who were maybe in default, not making student loan payments or being late on student loan payments prior to the epidemic here, how does that affect things going forward here?
If someone was in default prior to the CARES Act being passed, none of the CARES Act applied.
None of it applies.
None of it applied. So people that were late or in default on a student loan or any debt means that you're stop making payments for an extended period of time. And it would show that way on your credit report that you defaulted on a loan, you owe the government 20 grand or whatever, and you're not paying. So if you were in default or trying to get out of default, the CARES Act did not apply to your situation.
So that history is going to just start right back up when this all comes out of forbearance.
It would have never paused.
It would have never paused.
Never paused.
So if you were in default and you stopped making your payments, it is in default, and you're going to have a world of hurt here. At some
Correct.
point, you're going to have to deal with.
Correct. You're still going to have to deal with that.
I was looking at a statistic here. It looks like the average student loan debt out there across the nation is about $42,150. And
Per student.
Per student. And now that outweighs in the American household more than their auto payment and their credit card payments combined. It's the biggest expense, one of the biggest expenses, except the home that they have on these student loans. Okay, so there's been a recent announcement here that the forbearance is going to end on January 31st of 2021. Can you elaborate on that a little bit?
Yes. So we've known for a while that the forbearance situation would wind down here. From the mortgage forbearance standpoint, that just ended in the end of September. So borrowers that pause their mortgage for an extended period of time have to start making payments again, make arrangements with their lender. That now we're expecting that to happen with the student loans, and they've already said it will not be extended. So what will occur February 1st is that all student loans that have not been paid on in the last 18 months due to the forbearance situation will start to have minimum payments again. Interest will start accruing again, and these consumers will have to go back to the Department of Education to set up extended payment plans, such as income-based repayment plans. So when you talk about, what do we talk about? What was the total number of student loan out there?
$1.6 trillion.
Right. You don't know how many borrowers that is per se.
I believe it's in the millions.
Okay.
There.
Yeah, that's millions and millions of Americans that have student loan debt that has been paused. So my concern, knowing how challenging dealing with the Department of Education is, and again, I've seen this myself personally, and I've seen it as a mortgage professional for 20 plus years, they're not good at communicating. Right. Okay. Consumers that have student loan debt are already getting emails right now with the Department of Education. If they're not paying attention to the communication that they're getting and don't go in there and set up auto payments again or set up a payment, system, we could see people that are defaulting on student loans just because they forgot about them.
Or they were unaware that this is all happening.
Right. Or what if, I don't know, here's the question I don't know. I don't know if the auto pay that somebody had set up prior to the CARES Act is just going to go back online when all this kicks into gear. So what I am recommending, anybody that I know that has student loans, I am telling them to log into the website with the Department of Education, review their loan information, pay attention to any communication that they're getting, and make sure your payments are set up to begin drafting in February.
And also go back over the last 18 months and check your credit card you got on file, because it may have expired.
Right, right.
Right.
Or what if you changed banks? I mean, there's a lot of variables here that if you are not thinking of it and you're not paying attention, we could see a tremendous amount of defaults.
Well, yeah.
Which is only going to damage people's credit, and people that aren't thinking about it, that, consumers honestly could say, well, I just thought my auto pay would kick in again. And they're going to find out in 3 to 6 months that, oh no, guess what? It didn't kick in.
So ignorance is no excuse.
Correct. And you're going to, potentially ruin your credit.
As we talk about these people that have these student loans, are coming out of college and all that, we're talking about these people want to enter buying a home and not understanding the effect that one of these student loan payments, if they were late on, if they had a couple student loans and they were late on each one of those 30 days, or the Department of Education marked them as 30 days late, that could be maybe 80 points a hit on your credit. And you can go from a 700 credit score down to a 620 and price you right out of a mortgage.
Right.
So this is going to hurt people. So I guess I would say planning, and like you suggested, be proactive. So on anybody who's got a student loan, what is the best thing? I'm reading here that as they know all these student loans are coming back into repayment, that the Department of Education is going to man up and hire a bunch of more people to handle the consumer calls and all that stuff.
Yeah, they know that they've got a huge feat in front of them to get all of these consumers back online. So I read an article yesterday about how the student loan repayment will work as this relief program ends. And, they are looking to hire people, to work in these servicing departments of the student loan companies to deal with the volume and the influx. But we know that there's a labor shortage. So it's great to say that they're going to hire people, but that's not, they're going to train all of them in the next 60 days to, have them be proficient here. They did say in the article that I read that they probably will have a 90-day ramp up for people. So if they don't make the payment in February, it may not damage your credit for the first 90 days, but that's not going to go beyond 90 days. So again, from a consumer standpoint, being proactive, logging in, calling if you need to, requesting, income-based repayment or a payment plan that's going to work with your budget, we've got to get this back online and hopefully not damage people's credit.
Absolutely.
Because particularly what would be the first-time home buyer market, right?
Yeah.
Those are younger adults that may have student loan debt. If they're not paying attention and they think, I'm going to buy a house in 2022, and they don't pay attention to this, they could cause irreparable damage to their credit history and then not be able to get a mortgage or any other loan very easily.
It's funny because I had several clients here in the last couple months come in and we're talking about their student loans, and I would ask, are you going to get these into repayment? And oftentimes I hear, no, if I go into repayment, maybe Biden won't pay them off and forgive them.
Yeah.
So there's some construed thought processes out there. Any thoughts on that? Who's going to get forgived? Because you guys, these students, they made a promise to pay.
Right.
How are they going to pick and choose?
Well, there has been a program, and this has been in the news recently, because this program has been around a while. There is a program that potentially gives a student options to get their student loans forgiven if they work in a nonprofit public sector type setting.
Such as?
A teacher in the city of Detroit.
Okay.
A healthcare worker, maybe a nurse that works in a underprivileged area.
I think employees of the state of Michigan.
Potentially. The problem that I have read on this recently, and again, this is, I'm going to share this from my consumer or from my loan officer hat here. According to what this potential student loan forgiveness plan has been for decades, this is not a new plan. Everybody's talking about new plans, and there are some, the government has started forgiving some student loans this year. I'll touch on that briefly, but the plan that said, hey, you need to make 10 years of payments on your student loans. You need to work in a particular sector. Okay, so a teacher in an affluent school district is not going to fall into this category. But if the teacher works in a non-affluent area, they might be eligible for this. But they're supposed to make 10 years, 120 payments. And there are criteria. So I'm not going to quote the exact specifics here. I'm just kind of touching the high points here. But if they make 10 years worth of payments, they're then supposed to be able to apply for student loan forgiveness. So here's what I'm going to tell you. I've never talked to a consumer who ever had their student loans forgiven. And in the recent news articles, 92% of consumers that apply for this program don't really meet the criteria.
So that's like hitting the lottery.
Exactly. So there's a lot of people that I think have gone into this and taken on a lot of debt and don't get it forgiven. So the government right now is reviewing the program and trying to figure out how do you get the people to truly qualify for this if they worked in those sectors that were, that the plan fell under. Now, I have read they're now forgiving student loans for people that are permanently disabled. They are also forgiving student loan debt to consumers that went to a school that didn't stay open. So there's a few schools nationwide. It's not like this is a broad-based situation, but the school went out of business. So, for instance, you went to a specific IT school. They had specific training programs. I mean, IT comes to mind because there are a couple of schools that fell under this. They were small, technical-based colleges, and they shut their doors. And because of the program that they offered, those students really had credits that couldn't be transferred anywhere else.
Oh, absolutely. And I've had a couple of those clients where, hey, the school shut down, so I'm not paying my student loans because they weren't able to give me a degree. They are still on the hook for that until they can get a lawsuit or something to get it resolved.
So the government did expand that program and forgive some of that debt. So they basically told these students, look, if you went to one of these schools that shut down and you couldn't graduate because of the shutdown, they're forgiving that debt. So there's a couple of paths. But, it's like if you're going to borrow the money, you need to be prepared to pay it back.
Yes, and talking about paying the money back, let's kind of just give an example here because, what do you use for collateral? When you go buy a car, they use the car for collateral. You don't make your payment, they're going to come and take the car. When you buy a home, they use the home as collateral. If you don't make your payments, they're going to come and foreclose and take the home. But when it comes to student loans, there is really no collateral. The only collateral you really have is future earnings.
Correct.
That is the collateral. And so on these student loans, you are going to pay. Student loans cannot even be put into bankruptcy to forgive debt in 99% of the cases. And so what's going to happen is they could garnish your wages. They can take your IRS tax returns and they can dip into your Social Security wages. They say that there is 41% of student loan debt is being repaid by senior citizens right now.
Yeah.
It's just insane out there. So you got to make sure you understand sooner or later they're coming for their money. And okay, so let's talk about being proactive. What does a consumer do now here in October of 2021? What is the best way to be proactive?
Get online with the Department of Education. Make sure your passwords work. Make sure that you can receive all communication from the Department of Education. Make sure that your email is correct, your phone number is correct. They have your mailing address. And make sure your auto pay is set up. If you need income-based repayment, apply for it as soon as possible.
And let's talk, what is income-based repayment? How does that work, Danielle?
Well, let's say you have a college graduate who's just graduating or recently graduated, and they're at the lower end of the income scale because in their field, they're just getting started. The government will allow you to apply for a potential lower payment and extend the repayment terms typically based on what your income is. So they're not, let's say you got, $50,000 worth of student loans and you can't afford that payment.
That $500 1% payback.
Right. They'll work with you and say, okay, if you can tell, there's some formulas that they follow. They look at your income and then they determine what you can afford to repay.
And we as lenders, if we have that documentation of that income-based repayment plan, that is the payment we will use to count against the student when they're buying a home, which it helps out many, many home buyers.
Correct, because otherwise, from a lending perspective, typically we have to use between 0.5% and 1%, depending on the loan program. So if we can get an actual payment, it's usually better for the borrower who is trying to buy a home.
Right. And so now they talk about the income-based. Generally, you have to reapply every year because your income changes. And there's talk here that now that they're going to add resources that you're going to be able to do this over the phone, which is some phone information, which is going to make it at least easier for the next couple years. But I would assume that would go away and they would want really documentation.
The other thing that I would recommend consumers consider with student loan debt is to consolidate their debt possibly. So the way student loans work is that you borrow the money semester by semester, okay? You don't borrow a year at a time. You take out a loan for a semester. If you're still in school, the next semester you get another loan. So someone with a typical undergrad degree that takes 4 years could have 8 student loans on their credit report. And we
see that quite often.
The way it shows up on your credit report is different than what you think you're doing paying your student loans. So you're going to make one payment for all of those 8 loans. When we look at your credit report, we're going to see 8 different student loans. So what's really important to understand as a consumer with student loan debt is that, let's say you don't start making payments February 2022. Okay, you are not going to have 1 late payment on your credit. You're going to have 8.
And you will not get a mortgage now.
And now you will not get a mortgage. Okay. And if you miss 3 payments, that is 8 times 3 payments that are late. So the student loans are just dangerous because it's not just, again, you think you're missing 1 payment, but you're really missing 8. When you consolidate a student loan, what you are doing is you are going to the Department of Education and saying, make me an offer to consolidate this debt. Let's come up with a repayment term that I can handle. Let's potentially lower the interest rate and come up with a plan that would then take all 8 of those loans, put them into 1 loan, 1 payment, 1 interest rate.
And under 1 trade line on the credit report.
Correct. Now, there is something called subsidized student loans and unsubsidized student loans.
Explain that.
So a subsidized student loan, when you apply for a student loan, the student and their parents will file a FAFSA, F-A-F-S-A. It's federal aid for student loans.
And everybody's got to fill that out.
Everybody's got to whether you qualify for the student loans or not. So you fill out the FAFSA form. Then it tells the Department of Education about the parental financial income situation. It also tells the school. So this will help a student qualify for Pell Grants, which are free money, income-based. It will also tell the school whether or not the student will qualify for federal loans, because believe it or not everybody does. Then the federal government has 2 types of student loans. A subsidized student loan is a loan based on the student and their family income. Says, look, we're going to borrow you this money and you don't have to pay interest when you're in school. So that's it. For instance, you borrow $5,500, for instance, as a freshman, you don't have to pay interest on it until after you graduate.
And that's about 90% of them out there. It's a very high percentage.
It's pretty high percent, yes. So that is a good tool because you're not paying interest for the next 4 years while you're in school. An unsubsidized loan is for those that don't fall into whatever the income bracket is. And then basically you borrow that money and start paying interest on day 1. So if you borrow $5,500 in your freshman year, you're going to owe more than that by the time you graduate and start paying it back.
Wow.
And I believe that there's interest rate differences between subsidized and unsubsidized. I don't know what that is off the top of my head because the interest rates on the student loans do vary from year to year. So many students will look at their statements and kind of get confused and complain and go, well, I got one at 3.5% and I have one at 6.5%.
Wow.
which is a huge difference. I mean, 6.5% is very high for student loan debt
in today's market.
Especially if you're paying interest before you ever graduate.
Right, on an unsubsidized loan.
And then when a student takes any type of forbearance or deferral on the loan, it will still accrue interest.
Right.
So let's say they graduate, they do some kind of income-based repayment plan or possibly put it in forbearance, they're racking up interest. And it's very common for us to see on a student's credit report, they borrowed 50 grand, but now they owe 80. And they don't understand why, but that interest is going to accrue.
Compound.
So it's going to compound, and it is not pretty. Not pretty at all.
So let's talk about the students that actually get a cosigner. Parents say, I'll co-sign you for
a Parent Plus loan.
The Parent Plus loan. Let's kind of explain what those are, and let's talk about the ramifications of what could happen to the parents.
Sure. Well, let's start with this. The government only allows a student to take out a certain amount of student loan debt every year. Right now, I believe that a first-year student can get $5,500. I think second year is either $5,500 or $6,500, but every year it goes up just a little bit. I think the most that a student can get for an undergrad degree is about $7,500 a year in debt. So on average, that's not a lot of student debt, right? I mean, they're only allowing you to borrow between 30 and 40 grand, which doesn't even touch the cost of a student to get them through school, room and board, books, the whole 9 yards. What a lot of students then turn to is non-government backed debt, which is a whole other conversation. And a lot of students will wind up with more student loan debt. What was the other question you asked? Sorry.
We bring mom and dad on the
co-sign. Yes, I'm sorry. So what a Parent Plus loan is the parent basically co-signing for the student so that the bank will give them more money. Mm-hmm. Okay. And then, but here's the caveat with Parent Plus loans. It will be on the parent's credit report. There is no forbearance or deferment typically in that situation. If the parents are trying to get a mortgage, buy a car, we're going to have to count that debt against them. And one of the things that I've read some very sad news articles on is what happens if your child passes away.
Yep.
And let's say parents borrowed $100,000 on Parent Plus loans, and something happens, child dies, and they're at a very young age. That parent is responsible for paying that debt back.
Absolutely. And then also, on the other hand, is the student borrows that $100,000, mom and dad co-sign. The kid goes out and gets a job and all that. And let's say he decides, or if he was late on that student loan payment, because he's responsible, even though mom and dad co-sign, this is going to destroy mom and dad's credit.
Absolutely. Absolutely. Because a lot of parents say, okay, I'll take out the plus loan, but my kid's going to be the one to pay it back.
Yeah.
But that's, a lot of times when the Parent Plus loans are taken out, they're for very large amounts of money. I typically don't see them for small amounts of money. So
now, can he, after he graduates and he's working, can he then refinance that loan to get it out of mom and dad's name?
Potentially, yes. Yeah, there are a lot of options that have come up in the last couple of years that seem to be consumer friendly to give them the option to refinance, put them in a better situation. Because, now again, we're not so young anymore. I know that when I first started taking out student loans, interest rates for student loans used to be very low. They were 2-3%. Nowadays, they're upwards of 6.5%, 6.5%. I've seen them in some cases higher. Private student loans are higher than that. And, here's my big question as a consumer and a parent. We have seen the bank lending rates be zero for many years. Uh-huh. Why is the federal government lending money at 6.5% to students that in some cases are, don't have the ability to repay? It's great. Here's the thing that I told my kids, and I followed a very non-traditional path in life. So I graduated from high school. I was the oldest grandchild on both sides of my family. No one had ever gone to college. I wanted to be a nurse back then. And I did get into nursing school, believe it or not, but I was too afraid to take out student loans, even though it would have made sense for me as a nurse, if I would have finished, to take out student loans and finish my degree, because then I would have had a job and I could have paid them back. But I didn't understand. My mom didn't understand. Nobody in my family had ever gone to college. So I didn't finish college because I didn't have the money. I was working full-time, trying to go to school full-time, which in a medical-based degree is kind of not recommended. So I ended up working, getting married, have a family, all that was great. But I always took college classes whenever I could. So back in the 90s is when the online college classes came a thing. I would take a class when I could, when we could afford it, did community college stuff. And then eventually, a little bit later in life, I decided to enter a degree completion program, most of which was online, so I could try to fit it into my schedule. But I paid what I could as I went along. When I got to the end of that, I did have to take out some student loans. I had scholarships, which was a great thing, cut the cost in about half, but I still needed help to finance that. One of the things that's really dangerous with the student loans is that the government will give you, or the banks will give you money without you having to classify how you're going to pay, what you're going to use the money for. So let's say you need $5,000 for tuition and they give you a loan for $6,000. They don't question what you do with the other $1,000. You can use it for room and board. You could use it for books. Heck, they'll even let you use the money for transportation for a commuter student that has, you're going to have expenses. And I've had, of my 4 children, I've had 2 of them live on campus and I've had 2 commuter students. Wow. So, I've experienced lots of different things, but, you literally could use that money for whatever you want. I have had consumers call me over the years to say, I want to buy a house. I work and I'm a college student and I've got this much money. And I'll say, okay, do you have the money money saved in your bank account? Not yet. It's coming from my student loans. So they borrow more money than they need at these ridiculous interest rates, putting it in the bank and then thinking that they can use the money to buy a house. Now, that doesn't happen often, but I've gotten that more than once.
So they're using borrowed money so they can borrow more money, which is actually against the guidelines.
Correct. So from the mortgage world, you cannot use excess student loan money towards buying a house. So that's a no-no. But I, would really caution consumers, parents, students, don't borrow no more than you have to. There's a lot of angles, and we're definitely seeing a shift, right, in the labor market, right?
Yeah.
So you can get a halfway decent job without
now,
college.
Right, but here's the thing, even with the jobs now the employers are bringing these students in saying, look, man, we're going to pay off a part of your student loan debt as part of the offer.
Right.
And a lot of these people are gravitating towards those type of offers.
Right. Or for a student that maybe has a bachelor's degree and really wants a master's, go to work and find a company that is going to give you experience, benefits, and a paycheck that may very well pay for your master's.
Earn and learn.
Earn and learn. My son-in-law, very hardworking young man, did go to work for a company about 4 years ago. And they're not a small company, but they are a Detroit-based manufacturing company. And they approached him a couple years ago and said, hey, we want you to go to school. We will help pay for your education. He is now getting an accounting degree. He is a husband, a father, and a homeowner. He works about 60 hours a week, and he is taking most of his classes, I believe, are online. So he is just literally, the man works around the clock, but he's getting an accounting degree, and his company has already said, this is where we want you to be in a couple years. They love him so much and his work ethic, but guess what? Is it hard to be a working adult and a husband and a father?
Absolutely.
Absolutely. But the thing that I learned personally, I graduated from college the year my oldest graduated from high school. And you know what? My kids saw me It took me 4 years to wrap up my bachelor's degree at that point in my life when I committed to doing it. And I did take classes for a full time for a little while. That about set me over the edge, between working and, managing my husband's business and whatnot, and having 4 kids. But my kids saw the work that I put into it. Right. And that definitely impacted them. And when my kids went to school, I have a strong personality, right? You know that.
You got a D on your disc profile.
Yes,
so
I'm a very high D.
High D.
But basically, what I told my older daughters was, look, if you're gonna go to college, we highly recommend it, okay? But you better know what you're doing. We're not gonna do this and waffle around on what you want to graduate in. I made them research and say, okay, where are the careers needed in this country in the next 10 years? Right. Okay. What are your interests? What are your skills and aptitudes? And how do we put that in the right program? So my oldest has a master's degree in architectural engineering. My second daughter is a registered nurse. She's got her bachelor's. My third daughter is getting a business degree, and my son, he is studying political science and business right now. But with the first two, we knew that this is where they were going to go. This is what their projected income was, and their projected ability to get hired, right? Both of them have had jobs, no issues, repaid their loans, they're homeowners, they've got families. They're both the 2 older girls are married. But I was very direct. And the other thing I said to them as parents, I said, look, we start on this journey, we don't stop. Right. And they had stumbling blocks. They had classes that challenged them that, both of them being in engineering and medicine, they have certain classes that they had to get minimum grades in. And if they didn't get an 80 in that class, you had to take it over. So they had stumbling blocks, but I had to be the cheerleader on the sidelines and said, no, if you have to adjust the sail. Right. You don't have to take 18 credit hours.
Right.
Take 12, take 14, take something that you can manage. My older daughter did work when she was in college to help support herself and to have, money and whatnot. Harder for my daughter that was the nurse. But, I didn't let him stop. And they had to adjust. We had some challenges, but they graduated. I think my older daughter did a 5-year program in 6 years. My second daughter took 4.5 years to graduate. But they got it done, because if you stop taking classes for 6 months, your student loan debt triggers repayment. Then it doesn't matter if you have a job. It doesn't matter if you're working in your field. Right. Then you have a bill that's going to come due that you're not going to be able to meet. I mean, honestly, I think, and without, I don't want to get political on things.
Sure, go ahead.
But this has nothing to do with politics.
Right,
it has nothing to do with really who's in the White House. They're not, as a nation, we're not qualifying students, we're not coaching students, and there are some online counseling things that the students have to take, but frankly, they're clueless. I think our young adults need mentors. They need career coaches. They need somebody to say, okay, if you want to be a physical therapist, let's get you a mentor that's a physical therapist that will help you, right, be your coach and on the sidelines and cheering you on. And if they stumble and fall, somebody to help pick them back up so that they don't quit. Or these students that keep going and keep racking up debt that really don't have the direction and then end up not finishing. I have seen students that have $100,000 worth of student loans and no degree.
Oh yeah.
There's something wrong with that situation. Yeah. How did they get there?
Well, one, and I don't want to get political, but when I look at it, I think in high school or the first class they take in college is about student loans and how the hell it's going to affect you or negatively affect you.
Yeah.
And the story of my wife and I, we were up at the pub having a couple beers out to dinner with the kids, and I said, I want to be a good dad. I owe my kids a college education and a new car, right? And so, My daughter, she graduated college, a 4-year degree. That cost me about $72,000, but there's no student loans. And now she's not even using her degree. She's flipping over to, to be a real estate agent. She's not going into what she did. And my son, I think that's going to cost upwards of $160,000 with room and board to get a bachelor's degree on a four-year university. And but we're going to get out of it with no student loans. But my kids are coming home and they're saying, "Oh my God, Dad, my roommate, my buddy, oh my God, they're up to hock in student loans," and they're so scared of what they're going to do. And then they don't want to even tell their parents that they don't want a job in the degree that they took. They're going to switch out. So there's some concern there too.
Yeah, that is what I tried to avoid. Now, again, I'm in the thick of this. I got 2 kids in college, but my daughter with a business degree is already working in the business field. I'm glad she'll have a degree. I think my degree definitely impacted my life in a positive manner. Did I change careers? No, but I certainly manage a really large branch now. And your kids are fortunate. You and your wife have sacrificed dramatically to be able to do that. I couldn't do that with my kids. I'm able to help the younger 2 more than I could the first 2. But when our older kids started college, we didn't have the money to help them. And most families don't. But that's where you look at and go, okay, could a community college be a good path to start? There are high school programs out there now that will allow a student to complete an associate's degree 1 year after high school.
Trade school, the old-fashioned trade school apprenticeships.
Right. Or get out there in the working world and save some money. And, it's okay to be a working adult. There's a million non-traditional things out there that you can still get an education, build your life, build a career.
Earn and learn.
Nobody walked. You didn't know what you wanted to do at 18.
Right.
I wanted to be a nurse, but guess what? I'm not a nurse and I've never been a nurse. So, you go, well, there's a lot of things out there, but you have to be concerned about the consumer debt and think about it. And as parents, here's my advice to you, parents. If you don't understand the student loans and how they work, maybe you're a parent. There's a lot of us parents that didn't graduate from school that maybe don't truly understand and go, oh, okay, my kid needs to go to college to survive. I'm not saying that that's not a goal, but as parents, talk to somebody, find somebody that's going to help educate you as a parent so you can guide your children. And, I'm not a big proponent of the traditional college experience. And, it's expensive. It's expensive as heck.
Well, when we talk about that, because I feel sorry for my kids or anybody else's kids, because let's say they do go to college. They have all these student loans, but maybe they don't graduate with all A's and they graduate with a C. Nowadays, you need a bachelor's degree to equal that high school diploma many years ago. Right. And yet that GPA, that's the only thing that an employer has you to measure your first time out getting the job. If you've got experience, they use the experience.
Yes and no. Do they look at they look at GPA or do they just say, hey, you got a degree in business or this or that?
Possibly. But my other concern was let's say my kid graduated with not good grades, or doesn't like that field. One, they're stuck with $80,000 in student loan debt, and they can't find a job. They're already down with the lower grades. They can't find a job, and now we stick them with all this debt. And I just thought, man, I wouldn't want to be in that situation.
Well, hopefully right now, though, you look at the labor shortage. For wages are going up. Yes, there's inflation, so that's a whole nother topic we won't touch on today. But anybody should be able to get a job right now. If you want a job, you should be able to go out and get the job that you want. So again, if you're in high school and you aren't sure what you want to do, you don't have to have all the answers. Start somewhere. Think of a goal. Maybe you do a combination of working, going to school kind of a thing and figure it out as you go.
Yeah, my youngest, he doesn't really know what he wants to do. And he's thinking, I may do the community college or I may try, trade school for the first couple of years to kind of get a feel for what's going on. And I absolutely support that.
Yeah. Well, I think that the problem that I see, my kids were helped when they had internships or had work experience. How do you know if you've never done much, you need to get out there, think of what might interest you and try something out, get a job, part-time job, full-time job, see what's out there. And, before you just dive into student loans, and don't be, financing pizzas and coffees from, the coffee shop on your student loan debt. That's not wise.
Yeah, it's coming to haunt you.
Yeah.
So how do we wrap up this show here? And what's the points someone could take home with this show?
Well,
here?
the big thing right now is if you have current student loan debt, get a hold of the Department of Education now.
Proactive.
Yep, be proactive. Start working on getting your repayment structure squared away. They are going to be inundated with millions of Americans that are trying to do this in January. And I can only imagine that the wait times will be ridiculous.
And also, if you do have student loans going in repayment, and with several of them, look into that consolidating all those into just one loan. Income base is always a great way to go because you can always pay more than the minimum payment. Trust me, they'll take your money.
Yes, absolutely.
Anything else we want to tell our listeners before we leave?
Nope, that's about all I can think of.
Okay,
today.
well, if you have more questions on student loans or repayment plans, we might be able to help. You can always email at info@assistmyrealtor.com. Your co-host, Danielle Boote, and I'm Victor Bals, and we'll see you next time here on A Smarter Way Home.